Hello, this is Julius from Basic Financials. This video is just to say there is actually a 50% tax rate, which isn't a big headline anywhere for obvious reasons. Most people think that you've got 20% and then 40% once you get into a higher rate, then 45% once you get over 150,000. But there is a hidden 50% rate. And why is that? When you get, if you're lucky enough to have income that is 100,000 or more, for every £2, that your income is over £100,000, you start to lose your personal allowance by £1. So the personal allowance at the moment is 12,570. But if I take a couple of years ago, it was 12,500. So let's take that figure because it's easier to use. By the time you got to 25,000, so I suppose now it's 25,140. But yeah, by the time you get to that amount of income, so 125,000 or 125,140, then you will have lost all of your personal allowance, because for every £2, you would have lost £1 of your personal allowance, so you're down to nothing. Now, what does that mean? That means that for every pound over £100,000 that you earn, it means that 50p will get an extra tax at 20%, because you lost your personal allowance, and therefore that takes out the income that was being taxed at 20%. And also the £1 will be taxed at 40%. So you're effectively getting, for every pound over £100,000 up to that amount, double the personal allowance, you will be paying tax at 40% on that pound, and half at 20% on half of it. So in other words, that's the same as 10% on all of it. So 40% plus 10% is 50%. You can, if that is a bit confusing, you can work out the numbers. Base it on the easy amount of when the personal allowance was 12,500, and see what your tax bill would be if your income were 125,000 compared to being 100,000, and you'll see that the tax bill would be more, and the extra amount would have been taxed at 50%. Yeah, so it's a little hidden fact that there is a 50% tax rate, but you'll never hear that. Now, why is it useful to know that? Again, because of things like pension contributions, anything that can bring your income down below that £100,000. You don't really want your income in that high rate band. If your income is well over 125,000, then it's not going to affect you. You've already paid that 50,000, and you're you already paid that 50%, and you're already into the 45%. But you could, if you're in that marginal bit, you could maybe potentially pay a pension contribution to bring it down to below £100,000. In fact, even if your income were over the 125, you could pay big contributions to bring your income down. But yeah, so if you can bring your income down below £100,000, then that would be well worth doing. And remember to include all your gift aid donations in your tax return, because the way when they look at that your total income for that for the purposes of whether you're losing your personal allowance, it's based on your income minus the gross amount in pension contributions and the gross amount of your charity donations. So yeah, that's a little bit of not so pleasant information. But if you've got any questions, then please leave them in the box below. And I'll see you again for another video sometime. Please remember to like and subscribe if you can. And thanks very much for listening. Bye.